Hey there, everybody. This is Randy Dalton coming to you from the R&D channel. Today, we're going to be talking about investment, real estate investing. Are you currently thinking about investing in real estate? Are you currently rethinking your strategy in terms of where to invest? I know a lot of people left Ontario. They sold their portfolio, they moved to the US. They moved out east, they moved out west. Maybe now you are rethinking that and thinking about selling your portfolios and coming back and investing in Ontario. There's a lot of chatter out there with regards to is Ontario starting to come back in terms of a good place to invest. So, if you are thinking about this, if you're interested in learning more about Ontario and what's going on, whether or not it's a good place to invest again, give a listen to this video. You're going to learn lots. Yeah, let's get started. Have you been thinking about getting involved in real estate investing? Have you maybe been an investor for some time, maybe sold off your portfolio in Ontario and thought things were maybe better for you in the US? I know a lot of people moved down to the US. I know some people moved out east, and I know some people that moved out west. I'm hearing a lot of chatter out there with regards to maybe it's time to rethink our strategies and start investing in Ontario again. So I thought, we're just doing one video this summer. We'll get back to every month starting in September. But I thought, why not take an opportunity and talk about investing in Ontario? So let's get started. If you're interested in investing or you're thinking about coming back, you really need to listen to this video. Lots of information. All right. So let's get started. So let's talk about it. Let's talk about whether or not now is a good time to return to Ontario and start investing, real estate investing. I was a RAIN member for 10 years. And Don Campbell was head of RAIN over 3 decades. He would be on stage every month and he would be talking about positive cash flow, positive cash flow, positive cash flow, positive cash flow. In his mind, it didn't matter if the economy was going up, economy's going down, population's going up, population's going down. It didn't matter to him. At the end of the day, if he could find a property that generated positive cash flow, he bought it. Simple as that. So, what are the factors? If that's what we're going to use as our asset test to buy a property, and honest to goodness, people, that is exactly what you should be doing. That is your asset test. Do not buy negative cash flow. It will eat your lunch. Words from Don Campbell. Look for positive cash flow. So, what are the factors that impact positive cash flow? Think about it, right? The number one factor with regards to generating positive cash flow, your biggest cost by far, your mortgage payment. Your mortgage payment is being driven by two things: housing prices and interest rates. And that's it. So let's look at, there's been a lot of talk about housing prices and, it's becoming more affordable. Housing prices are way down. I pulled some information off of the CREA website. And interesting, between the years 2017 and 2022, over that 4-year period, housing prices increased by 44%. Is that a surprise to anybody? Yes. It went absolutely nuts, right? Through COVID and shortly after COVID. From 2022, where we hit our high, to what is projected for 2025, the final number for 2025, we're seeing a drop of 4.6%. 4.6%. Like, That's not a lot, people. That's over 4 years. If you average that, and these are the real numbers, this is getting emotion and headlines and what the media want to say about things. These are real numbers directly from the Canadian Real Estate Association. 4.6% down over 4 years. That's less than 1.2% per year, right? Not a big deal at all. Now that's Canadian, right? Don Campbell would always say, forget the average. You're worried you don't invest in Canada. You do, but you don't. You buy a house in Hamilton, you buy a house in Kitchener, right? So I couldn't get a lot of details in terms of those particular real estate boards, but I was able to find information from the Ontario Real Estate Association. The Ontario Real Estate Association basically shows between the years 2018 and 2022, so that 4 year period, there was an increase in real estate of 50%. 44% for Canada, 50% for Ontario. Kind of to be expected, right? More importantly, the drop. The drop from 2023 to 2025, a 3 year, right? If we look at 4 year, it's basically the same number. 2022 and 2023, there was no change. So 2022 to 2025, 4 year period, housing prices went down by 2.1%. 2.1%, half of what happened in Canada, right? 2.1% over 4 years. We're talking about 5.25%. Somebody do the math for me. 5.25%. Sorry, 5.525%. 0.525% per year. That's what's happened in terms of real estate values. So there's a bunch of realtors out there right now talking about, hey, prices are down. This is a great time to buy. Honest to God, they're down 2.1% in the last 4 years. I'm not running out buying property because I'm saving 2.1%. If Sobeys had a sale on steak and it was 2.1%, I think steak these days like $40 a pound, right? So 2.1% is a buck, right? Would you go running out to Sobeys because you could buy steak for $39 a pound instead of $40 a pound? I don't think so. You spend more money in gas getting to Sobeys if you've got Metro right beside you, right? Maybe I shouldn't be mentioning names like that, but I mentioned a bunch of them. So, and there's also Fortinos and Loblaws, and yeah, we'll get them all in there. So if you think about it in terms of real estate value, real estate prices, it's really not a good time to go buy. Now, what did we say? Impacting your mortgage payment, number one is housing prices down by 2%. The other factor is interest rates. And there is a bit of a change, right? 1990 to 2025. The high, February 1991, was 16%. People were paying 16% interest. The average over that period is 5.16. Sorry, maybe I can't read my writing. It might be 5.76%. Okay. July 12th to 2023 to May 31st, 2024, we were looking at 5%, 5% interest, right? Current today, 2.75, right? Much better. And that has a significant impact on your mortgage payment. So definitely with those interest rates down, your mortgage payment, even though you're not really seeing any change in prices, your mortgage payment is going to be down significantly, right? Let's take a look at those numbers. So let's take a look at interest rates. Now, the interest rates that I mentioned, that was actually Bank of Canada rates, not the big five, right? Hopefully, you're in a position, you've got good credit, You're looking at you're being considered a Class A borrower, and you're dealing with Big Five. So, what I've done, I've taken the Bank of Canada rates that I mentioned, and I've added 2%. Seems like fairly reasonable number. The Big Five appear to be adding a premium of about 2% over and above the Bank of Canada rate. I know that number varies a little bit from time to time, but yeah, so we had to make an assumption because I can't go back in time and figure out what the Big Five were charging a few years ago. If somebody knows, feel free to add it in the comment section. But as I said, a few years back, Bank of Canada was 5%. So we add 2%, we get 7%. Then I took a look at an average Ontario home. Now, the average was a little bit over 8. So to make the math really simple, shoot me if you want. To make the math really simple, I just took $800,000 as the average. $800,000, assuming you're putting 20% down, that's $160,000 you're putting down. So your mortgage is on 640,000. Now I translated that over a 30-year amortization, and at 7%, your mortgage payment is just a little over $4,200. Ouch, that's a lot, eh? Wow. If we look at it today, based on that 2.75 current Bank of Canada rate, so 4.75%, and I think that's pretty reasonable. That's kind of what the Big Five are asking these days. So 4.75%, your mortgage payment is $3,300, just over $3,300. Difference, $900. That's a big impact on your mortgage payment. And remember, we talked positive cash flow. One of the biggest impacts that we have is what at the end of the day are we paying in terms of the mortgage. So we've kind of answered that question now. Housing prices really hasn't done squat for us. Interest rates being down quite a bit has definitely done a lot. Now, is it going to stay down? Is it going to go down lower? Is it going to go up higher? That's something that we're going to consider in another video in the near future. I want to take this deep dive that we're going through and take a look at it in terms of issues like the political climate, what's going on. I want to take a look at it in terms of rents and what's happening with regards to rents. I want to take a look at it in terms of things like GDP, which have a big impact, right? And the rental market, population up, down, sideways, and also looking at that in terms of things like immigration. Right. So a number of things that we're going to be looking at in future. Also going to be talking about a couple of projects that R&B Properties is doing right now. A few things that we're doing to make things good in this current climate of real estate investing. So that is it for today. Just to recap, we have talked about when to buy. When to buy is when you can generate positive cash flow. How do you generate positive cash flow? Two of the biggest factors is the price of the house and interest rates, which we've covered off. Price of the house is down 2.1%. Not a big deal at all. Interest rates are down quite a bit, and that has had a significant impact on people's mortgage payment if they were purchasing for an investment property. So next time, we are going to talk about that third factor of positive cash flow, which is what's going on with rents. We're going to talk about those other subjects that I brought up, including things like GDP, population growth, and I am going to be sharing some financials with regards to some projects that R&B Properties is currently working on. So until then, thanks for watching. See you soon.